From your perspective, Development Finance Partners is active across the board. Tell us a little bit about what you've been doing and also how you've been assessing and playing out over the last 3 to 6 months.
The market started with a lot of momentum at the beginning of this year, and the confidence in the market fell off a cliff, obviously, during March and April. A number of transactions and approvals got withdrawn, and a number of those underwrite processes got delayed. In May, as conditions started to improve and confidence started to return, the downside risk of COVID started to become a little bit more quantifiable as we got on top of the pandemic, essentially. Credit markets began to flow and transactions began to settle, and market conditions probably got to near normal, although the cost of the capital certainly went up. And gradually constrained capital started to flow. What we've noticed is over the last few weeks, the level of liquidity in the market right up and down the capital structure in all asset classes has increased, and the cost of the capital has gone down. We're getting a number of calls now from various institutional partners who are all up and down the capital structure, from $1 million looking at residual stock loans all the way up to senior loans of 100 million up. So there's various tiers of lenders, and the first thing that we'll look at is, based upon the loan amount, which section of that pool of lenders is essentially in the market. So we've certainly noticed that liquidity levels have gone up even following the second wave. We've noticed that that level of investment that's looking for a strong risk-adjusted return relative to asset classes seems to be still on the increase. Certainly confidence levels have affected sales rates pretty much across the board. I've noticed that the moment that the second wave started to take hold in Melbourne, the level of confidence that our developer clients had and their ability to convert upon sales and inquiries, people showing up at open inspections, really fell off a cliff all at once, which was about probably 4 or 5 weeks ago. It was quite a dramatic shift. And that continues. The only exception to that would be land subs with registered land. That particular sector, as a result of stimulus through Home Builder, has been dramatically stimulated. Sales rates in that market have been at record levels.